Hey everyone! NIO's battery swapping network is a key factor in its success in China, but other EV manufacturers like Neta are struggling to compete. This video dives into the scalability challenges of battery swapping and what it means for the EV market. Battery swapping has emerged as a critical innovation in the electric vehicle EV industry, especially in China, where companies like NIO have invested heavily in creating expansive networks. However, the adoption of this technology by other players, such as Neta, raises questions about its viability, scalability, and whether it truly serves as a competitive moat. This article explores these dynamics, examining NIO's success, the struggles of competitors, and the implications for the EV market. Recently, Neta, a Chinese EV manufacturer, introduced battery swapping in an apparent effort to salvage its declining business. Their battery swap station, capable of completing a swap in 3 minutes, reflects a basic implementation of the technology. However, this move seems more like a desperate measure than a strategic innovation. In 2022, Neta sold 150,000 vehicles, a strong performance for the year. However, in 2023, sales plummeted to 120,000 units, marking a year-over-year decline. The situation worsened in October, with monthly deliveries dropping to just 6,000 vehicles. Reports of 70% job cuts and difficulties in paying employee salaries highlight the company's precarious position. Despite offering affordable EVs, Neta has struggled to attract buyers in a competitive market saturated with similarly priced options. The Chinese EV market is one of the most competitive in the world, characterized by aggressive price wars. While NIO has also been affected by these dynamics, it has managed to sustain itself through strategic initiatives. For example, NIO recently scaled back incentives, causing a dip in sales but improving profit margins. Additionally, the introduction of Onvo, a more affordable battery swap-compatible vehicle, underscores NIO's adaptability. Battery swapping remains central to NIO's strategy. Its network is unparalleled, offering convenience and reliability that competitors like Neta can't match. The rudimentary nature of Neta's battery swap stations highlights their lack of investment in infrastructure. Without extensive networks, competitors cannot provide the same seamless experience, such as highway swapping stations or rapid urban availability. One of the most critical factors determining the success of battery swapping is scale. Simply having a few stations in select cities is insufficient to attract a significant user base. For instance, Rising Auto and BAIC, two other Chinese EV players, have struggled to make battery swapping viable. Rising Auto's network is too small, forcing customers to travel long distances for a swap. This inconvenience makes charging at widely available stations a more practical choice. Even in cases where battery swap technology is implemented, such as BAIC's system for taxis in Beijing, the infrastructure is often rudimentary and unable to match NIO's sophistication. NIO's ability to scale its network has created a moat that others find difficult to cross. With more chargers and swap stations than Tesla in China, NIO has demonstrated the financial and logistical commitment required to dominate this space. The idea of a moat, something that gives a company a sustainable competitive advantage, is often debated in the context of battery swapping. Critics argue that the technology itself isn't exclusive and can be adopted by any company. However, NIO's extensive network and significant investment create a barrier to entry that competitors find hard to overcome. Building a battery swap network requires billions of dollars, making it prohibitive for smaller players. For instance, while Tesla's supercharger network in the US isn't technologically superior to other chargers, its scale and prime locations make it the go-to choice. Similarly, NIO's extensive infrastructure gives it a significant advantage. Competitors like Neta and Rising Auto are unlikely to place swap stations on highways or other strategic locations due to limited demand and financial constraints. As a result, NIO's network offers unparalleled convenience for long-distance travel and urban use. While NIO's battery swap system is a proven success in China, replicating this model in other markets presents challenges. Expanding to countries like the US would require the construction of thousands of swap stations, a massive capital investment. This financial hurdle underscores both the strength and vulnerability of NIO's moat. However, NIO has explored innovative solutions, such as franchising battery swap stations. By partnering with local investors or funds seeking stable returns, NIO could finance infrastructure expansion without bearing the full cost. This strategy is already being implemented in China and could serve as a model for international growth. Rising Auto provides an interesting case study of how battery swap infrastructure alone isn't enough to guarantee success. Although their swap experience is often praised for features like allowing the air conditioning and entertainment systems to remain operational during a swap, their network is too sparse to make a significant impact. Customers in smaller cities or rural areas often have no access to swap stations, making the technology irrelevant for them. This limited availability reinforces the importance of scale, a challenge that only well-established players like NIO can address. While battery swapping offers undeniable advantages, it also comes with limitations. The need for extensive infrastructure means that NIO must make significant investments to maintain its competitive edge. This requirement becomes even more daunting when considering international expansion. The capital and time required to replicate NIO's Chinese network in a new market could delay profitability. Moreover, NIO's reliance on battery swapping as a central strategy creates risks. If consumer preferences shift, or if alternative technologies, such as ultra-fast charging, become dominant, NIO's investments might lose their value. Battery swapping is a transformative technology in the EV market, and NIO has established itself as the leader in this space. While competitors like Neta and Rising Auto have attempted to enter the market, their lack of scale and infrastructure investment has limited their success. NIO's extensive network and strategic foresight have created a formidable moat, but maintaining and expanding this advantage requires continuous investment. As NIO looks to expand globally, the challenges of replicating its network will test the company's adaptability and financial resources. However, its innovative approaches, such as franchising, suggest that NIO is well positioned to navigate these challenges. Battery swapping, while not without its hurdles, remains a key differentiator for NIO in an increasingly competitive EV market. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.